Bob from Trade Genius here. Now that you set up a brokerage account, the next obvious question is what should you trade? And for me, I like to trade ETFs, and I think you should too. But before I get into that, let me just kind of give you the world of possibilities out there. You could trade direct equities, that's individual stocks, or you could trade what are called options, basically a buy or a sell, a call or a put, and it lets you just basically get more leverage trading an individual equity position. That you can buy an option for a period of time, an agreed upon price, and then if it goes in your direction, you'll make far more money than you would if you just traded the equities. And it also gives you downside protection, because if you lose on the trade, you only lost what you put into the option. From an ETF standpoint, we're going to talk about that a little bit more. It's basically a pool of different equities in a different section or sector. And a futures contracts are trading things like commodities and indexes, and gives you a lot more leverage, and it's something that more sophisticated investors attempt to do, and you can trade those typically around the clock. Again, why do I like ETFs? They give you a wide variety of investment choices. Gives you a chance to focus on certain sectors, areas you might have some expertise in, so then you can really focus in. If something is moving and is hot or is overvalued, you go ahead and focus your attention in those areas. Liquidity, which really means that are there enough buyers and sellers to give you good prices to get in and out of, versus something that's illiquid, which means that you may have to buy it or sell it at a price you don't like because there's not enough people in the market trading it. And it's also a way to avoid single stock disasters. So if a company like Chipotle has a big issue with their E. coli they had, their stock dropped pretty hard. Well, if it was part of an ETF, it kind of mutes it a little bit. And it's also a safest way to go short the market, in that, again, it's a pool. And in fact, it's safe enough that you can trade it in your IRA. And so this is the only way I really would recommend trying to short the market, is through the ETF. Other ways you can cause yourself unlimited damage. And then, in the next video here, we'll talk about which ETFs are best to trade and how to trade them, and Thinkorswim and Ameritrade. But before I do that, I'll just tell you the ones that I like to trade. I like to trade the SPY, which is S&P 500, the IWM, which are small caps, GLD is gold, GDX is precious metal miners, IBB is biotech, FXI/FXP is China, IYR and REK is real estate. This gives you enough exposure to the market. The biggest mistake a lot of new traders make is they chase everything that they hear or read about on TV or in the news, and you're usually a day late and a dollar short. So you just focus on these areas, not as many things you have to watch. You get your buy signal, you get your sell signal, and then you go ahead and make the trade. Thanks, and look for our next video. Bye-bye.